Good morning, everybody. The June 2017 School Land Board meeting will now come to order. Before we begin, I want to welcome Bobby Lumpkin with TDCJ, who's joining us this morning. We'll also be visiting this afternoon on some leases as well. Thank you for coming in. And Bill Hainga, who is an attorney who represents Hillcore and PDC in the back. Thank you for joining us as well. We always love having guests come in to visit us at the Stephen F. Austin. First item on the agenda is approval of the minutes from our last meeting on May 16, 2017. After the board has had a chance to review said minutes and assuming no questions, comments, or objections, I can entertain a motion to confirm said minutes.
So moved.
Second.
Motion is made, seconded, and carried to approve the first item on the agenda. Next item on the agenda is the consent agenda as posted. Item number 2. I've been advised that item number 2A, Tech 30, has been pulled from the docket, and but for that change, and assuming no questions, comments, or objections, I can entertain a motion to confirm said consent agenda as posted.
Motion.
Second.
Motion is made, seconded, and carried unanimously to approve the consent agenda. Next item on the agenda is number 3, as stated, consideration and action on tracks, terms and conditions for the August 1, 2017 oil, gas, and minerals lease sale.
Good morning. I'm Mary Beth Barnstone with Energy Resources. Staff requests school land board approval of 65 tracks for sale. 35 of the tracks are in the Delaware Basin. Together, these tracks cover about 12,000 acres, which is about half of the number of acres that were nominated for the last lease sale. The bonus per acre is ranges from $100 to $3,500 as a minimum, and those prices were set by staff based on location and geology. The royalty rate will be a fixed quarter for uplands tracks and variable 1/5 for Gulf and Bay tracks. Primary term will be 3 years for uplands and 5 years for submerged tracks. Rentals will be $10 an acre. The key areas of this sale are Reeves, Pecos, and Culberson County.
Any questions from the board at this time?
Thank you.
Is there a motion to confirm that consideration and action based on those outlined
And again, we're
conditions?
just setting the minimum, right? That's what you were saying?
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 3. Next item on the agenda is number 4.
Hi, good morning. Steve Rodriguez, Asset Management. Docket item 4 is LC 2007-0048 S&G Marina LLC on the Laguna Madre in Nueces County. This item is an amendment to a commercial easement on coastal public land comprising approximately 5.23 acres of encumbrance. It's a marina consisting of a dock, a concrete boat ramp, fence, a dredged area, and a pre-existing fill. The pre-existing fill encumbers nearly 2 acres and is a large part of the overall cost associated with this lease. Due to some investment issues in 2008, the project never received the financial backing that was anticipated, but nevertheless paid most of the annual rent for the expected project encumbrance. Initial project encumbrance just began about 2 years ago, 8 years after the lease execution. Our lessee has decided to scale back the project encumbrance to maintain a lower annual rental rate. Staff has come to an agreement with the lessee on the rent schedule moving forward that will utilize the current published fee schedule as well as collect $15,000 in back due payments. The total consideration for the 20-year term of this contract is $73,062.40. Any questions?
Questions from the board?
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 4. Next item on the agenda will be presented in executive session, and we'll enter executive session pursuant to Chapter 551, Subchapter D, Section 551, Tech 071 of the Texas Government Code for discussion and consideration regarding pending or contemplated litigation, and/or settlement offers, or to seek or receive attorney advice or counsel related to items 5 through 9 on the docket. We'll also enter session pursuant to subsection 551.072 for discussion and consideration concerning purchase, sale, exchange, lease, or value of real property-related items 5 through 9 on the docket. Following executive session, we'll reconvene in open session to complete the docket. The open session of the June 20, 2017 School Land Board meeting will now resume with item number 5.
Mark Adams with Energy Resources. Here today to recommend board approval on the groundwater lease in Reeves County to Solaris Midstream under the terms discussed and presented in executive session.
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 5. Thank you, Mark.
Thank you.
Next item on the agenda is number 6.
Good morning, Nick Orman, Office of General Counsel. Staff recommends approval of item number 6 under the terms discussed in executive session as being in the best interest of the permanent school fund. Happy to answer any questions.
So moved.
Did you make a motion?
He
I mean,
made a
second.
motion.
Second.
Motion is made, seconded, and carried unanimously to approve item number 6. Thank you, Nick. Next item on the agenda is number 7.
Good morning, Amber Long, Asset Management. Staff recommends approval of the disposition of excess land per the terms discussed in closed session. Any questions?
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 7. Next item is number 8. Thank you, Amber.
Good morning. Susan Shugair with Asset Management. Staff is recommending approval of the tract in Lampasas County, the vacancy, scrap file 16616, under the terms and condition as discussed in executive session as being in the best interest of the permanent school fund.
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 8. Next item is number 9.
Again, Susan Shugair with Asset Management. Staff is recommending approval of this vacant land in Houston County, Texas, file number SF 16617, as presented in executive session under the terms and condition as discussed as being in the best interest of the permanent school fund.
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 9. Thank you, Susan.
Thank you.
Final item on the agenda is the quarterly investment report from Rusty Martin.
Thank you, Mr. Chairman, members. Good morning. Good to see you again. I'm pleased to present you with a quarterly investment report of the TexGlow Permanent School Fund Real Assets Investment Portfolio for the period October 1 through December 31, 2016. As you're aware, the calculations and the data that are contained in the report were prepared by State Street Bank and its Private Edge Group, which are the custodial, accounting, and performance measurement agents for the portfolio. Just a brief summary of the market conditions at that time. Fourth quarter, U.S. GDP increased at an annual rate of 2.1% after increasing 3.5% in the third quarter, and for the entire year, GDP increased 2%. The U.S. unemployment rate ended the year at 4.7%. The Fed slightly increased its Fed funds target range by 25 basis points in mid-December, raising it from 0.25 to 0.50% as a target to 0.50 to 0.75%. They announced also that they expected economic conditions would evolve in a manner that warranted only gradual increases in future Fed funds rate levels. Thus, the rate will probably remain below levels that are expected to prevail in the long run, and the actual path of the Fed funds rate will, of course, depend on economic outlook indicated by incoming economic data. And we know that since then they've raised 2 more times, once in March and once in June. So the target rate is now 1% to 1.25%. The U.S. commercial real estate market, as measured by NPI, returned 1.73% for the quarter into December 31, and its trailing one-year return was 7.97%. All of the quarterly individual sector returns were positive. For the 27th time since the second quarter of 2008, industrial was the best performing sector. Gross total returns for each of the sectors were hotel up 67 basis points, retail up 1.65%, apartment up 1.67%, industrial up a whopping 3.04%, and office 1.35%. In the energy markets, WTI oil prices fluctuated around $50 a barrel for most of the period and then ended the year at $51.97 a barrel, which was just under a 40% increase over the year-end 2015 price of about $37.19 a barrel. Prices were primarily influenced by the OPEC announcement on November 30th that its members had agreed to reduce their combined output by 1.2 million barrels a day for a 6-month period beginning in January of this year. On the demand side, the U.S. Energy Information Agency estimated that global demand growth would be 1.3 million barrels a day, which when combined with the previously described supply cuts that OPEC announced indicates that a balance between supply and demand should occur sometime this year. Natural gas prices had a very strong run in the quarter, touching $3.70 a million BTU in December and ending the year at $3.59 a million BTU. That was an 86% increase over the 2015 year-end price of $1.93 per million BTU. Prices recovered as the 2015 inventory overhang burned away. Most analysts continue to expect that rising industrial demand, LNG exports, increased exports to Mexico, and continued coal to gas switching will push prices to $3.50 a million BTU by the end of this year. Turning to the performance of the portfolio, if you look at page 2 of the report, I'll go through the most important numbers there. Total NAV at the end of the year was about $5.6 billion. The external portfolio represented around 53% of that number at roughly $3 billion. The internal portfolio was roughly 4% of the portfolio at $225 million, and the remainder was cash equivalent investments awaiting investment as the money's called for capital commitments. The external portfolio had a tremendous quarter. It was up 9.67% versus a benchmark of 1.28%, so it outperformed the benchmark by approximately 840 basis points for the quarter. The real estate sector of the portfolio was up 2.54%, but most of the performance came from infrastructure and energy. Infrastructure was up 15.25% for the quarter, and energy was up 14.33% on oil prices. For the year ended December 31st, the return on the external portfolio was 18.2%. versus 6.7% on the benchmark, an outperformance of over 1,100 basis points. On the 3-year return, the portfolio was 14.1% versus 8.3% on the benchmark, outperformance of 574 basis points. And the 5-year average annual return on the external portfolio was 16.1% versus 9.2% on the benchmark, outperformance of 688 basis points. At the end of the year, about 37% of our total existing capital commitments remained unfunded. 24% of real estate was unfunded, 42% of infrastructure, and 46% of energy. The internal portfolio performed 1.95%. That was versus the NPI return of 1.73%, so it outperformed by 22 basis points. And the 1-year return on the internal portfolio was just over 8% versus 7.98% on NPI, so outperformance of about 7 basis points. On a combined basis, the portfolio was combined without cash. The portfolio was at a 9.1% for the quarter, 781 basis points over the benchmark, and also the 1-year and the 5-year were extremely a good number, 17.3% on the combined portfolio. That was approximately 1,060 basis points over the benchmark return of 6.73, and then the 5-year average, 15.1% versus 9.2 on the benchmark, outperformance of 592 basis points.
Can I ask a question?
As far as diversification is concerned,
Russ, can I ask a question?
sure.
On that 1 year, 17.3 says 1,000 basis points over benchmark. I mean, how do you get there? These are outstanding numbers.
Well, you get there by taking a long-term view and assessing what you think the opportunities are, and picking good partners and putting the money to work.
Is that
Continue to put the money to work when everybody else seems to want to run away from
And
certain
most of that
sectors.
appreciation was on the energy side, infrastructure? Was that mostly the?
Infrastructure, yeah, infrastructure was up over 15% for the quarter, and energy was up over almost 14.5% for the quarter. So those are,
And
Those
since
are
Gil
big-
interjected, I'll go ahead and interject. What was recently shared as well is, according, and these are unaudited returns in comparison to any other public pension here in Austin, we have delivered over 500 basis points over
And that's why.
the last calendar year.
Yeah.
Those
So the
outstanding numbers.
performance has been,
performance of the portfolio has really
solid.
been outstanding.
Yeah.
for the record.
Okay. Thank you for that, Mr. Commissioner. On a purely invested basis, the combined portfolio was still generally over-allocated to real estate at the end of the period at 38% versus a target of 33%, but that's going to continue to change over time as more of the commitments to infrastructure and energy actually funded. As a matter of fact, at the end of the year, at the end of that period, on an invested plus an unfunded commitments basis, the real estate allocation was 34% versus a 33% target. Infrastructure was at 27% versus a 32% target, and energy was at 39% versus 35% target. So a little over to energy, a little under to infrastructure, but we're looking at some infrastructure deals that we will bring later this year that will shift that balance a little bit more. As far as geographic diversification is concerned, currently the allocation to the U.S., excluding Texas, is 85% of the portfolio compared to a target of 75%. International allocation is now around 8% compared to a target of 10%. And the allocation purely to Texas is about 7% of the portfolio compared to a target of 15%. That's the end of the report. This is a non-voting item. I'm happy to answer any other questions you might have.
Nice report.
Thank you.
Thank you, Rusty.
Thank you.
And there being no further business before the board, this meeting is hereby adjourned.